Hello, I just want to talk about a new product that we're offering for some tax planning. It's a really powerful tool to help you and your business understand where your taxes are coming from, give you some ideas on how to reduce them, and give you some strategies and simulations and things that you can do on your own in order to have better conversations with you and your tax preparer so that you can plan better, as tax planning really happens mostly in the current year as opposed to after year end. There's this conversation I have with almost all of my clients after I do their taxes and they send them their how much they owe on their taxes. What happens is they go, well, how do I get this down? And I say, well, we should have done something last year. What we could have done last year is way more than what we can do this year. So this tool helps you stay ahead of it, understand it, and really keeps it in front of your face the whole time. So I just want to walk you through some of the tools and how this works and how it can help you out. Let's start here. So I just created a fake account for John Doe. I uploaded a tax return and I hooked it up to a couple of different QuickBooks accounts where it'll automatically pull in that information and update it as that gets updated. So it syncs through every so often. Gives you an update on where you're at tax wise and compares to where you were previously. I don't have this one set up to send out an automatic email, but I'll show you how to do that. So this is your dashboard. What it does is it just kind of gives you a summary of what's going on with your companies. Gives you a personal summary for this tax return. So I just uploaded the tax return. In order to get your tax return in here, you just go to the vault and then you can go ahead and upload your documents. And then after a few minutes, you may have to refresh your screen. It will then have processed the tax return as long as it's machine readable. So if you scan this in, it may not read it very well and you may have to manually put it in. But if it was exported from the tax software, it should read it just fine. So that all goes over here. And then it kind of gives you a little idea of what's happening here. It says, okay, it's looking like you're going to owe about $6,000 of taxes. It explains the income by month. This income by month is for the company that you select. So right now I have a company called First Company. If I come over here to Second Company, it will then show different numbers. It explains a little bit about expenses, and it's just outlines where your income is coming from. So looking at personal and businesses together, most of this income is W-2, a little bit from business, and then some from investments. You can scroll through here and see what's happening. You could go here to the business summary and click edit, change the type, company types. So if this was an S corporation or a C corporation, sole proprietorship, you could change that. You could explain the fixed assets. So this won't come in straight from QuickBooks, so you would have to put this in yourself. Is it a rental business? This is picking this up from the tax return, just saying that this is in New York, but you could change that on your personal protection page. Specified service business, you would be either yes or no. So this will automatically project what it thinks you're going to do by the end of the year. If you would like it to change what it's doing, you can override it and just so if you know that you're going to get a sale for like $50,000 in December, this is obviously not going to know that. You go ahead and put that in here, or any expenses. If you're going to accelerate some expenses, you can put that in directly. Back over here to the dashboard. And then I could switch between the companies. The other thing that's really important to note, if we look at, we'll go to here. If we look at the connection, you have to make sure that you pick either accrual or cash basis for the accounting to make sure that it's picking up the right type of how your corporation is being taxed. You can find that right on the tax return. Back over here to the dashboard again. And then the personal information. So if you want to change anything, so like you got a big raise or you had another child, you can go ahead and add these in. So this one, it's kind of important to know how old the kids are for some things. You put in your W-2 and how often you're going to get paid. If you upload your tax return, it may assign all of the wages to one person. So you may need to come in here and split that between the two. You could also put in a pay stub in order to figure out what your current year income is going to be. And then you could go through here and just manually do this if you want. If you're making any estimated tax payments, you could go ahead and put that under here. As of right now, I don't have any in here, but let's say I had them make a $20,000 tax payment. You could put that into the appropriate spot. Back up here to the dashboard. So that would update over here. So as of right now, it's showing the estimated amount of tax due based off of the projection and based off of the previous return with no adjustments in there. We can go to personal. Personal is that screen I just showed you. If I want to look at 2025, I can update this to 2025 and change any of those numbers so I can see what's going to happen there. Companies is that screen I showed you before where you change the business information. Regarding the connection, if you wanted to connect to 0 or if you just wanted to put it in manually, you could do this. but I have this set up to automatically pull in. I can set how often I want it to sync, and you can always just manually sync it. So I could do sync now, and it would sync the most recent information as of today. And then I could explain how I want it to be done as a projection. So linear just means I expect a growth. If I have a very cyclical business, I may go with a rolling average. I could just strictly use last year if I think it's going to be pretty similar, or if I think that there's a better date range for this business, I could pick that. To change my basis of accounting, I just always have to remember to hit save settings and then refresh. What this does is it creates a tax planning report for you. So this report, it's just kind of a basic, here's some ideas, here's some important information that you should know, you should go over. This one always takes a little bit to run. Now, I have already updated this, but if you come to this screen, you always want to hit update to current values, because this is a moment in time and it's based on the last time you updated it. This does not automatically happen. So if you come through here, it just says it's who's prepared for, who's prepared by. And then it has a lot of information about how to reduce your taxes and kind of important ideas and important things to know. Over here, it just breaks down how it explains all of these things, how this report is done, understand the grading system, so it has a grade on some of the tax strategies. It explains your demographics and what it is that you specifically have going on. It's reloading on me. Sometimes this actually does take quite a bit of time to reload. All right, so it just explains your demographics. It says this is about how much taxes we think you should owe as of now. This is how many payments you've made in. For the state, we don't show any payments as of yet. So that one did not get automatically picked up from the tax return, so I'd have to update that automatically because there are some tax payments that were done on this return. So you always do have to check to make sure this information did import correctly. This just explains, so this particular taxpayer is $62,000 away from the next lower tax bracket. So every dollar they save, they're going to save more money because it's a progressive income tax return. And it explains some differences between married filing separate and married filing joint. Again, I would have to go through and update that to explain where the W-2s are coming from, because both spouses did have income. And so the married filing separate would not be calculated correctly unless you go through and manually update that. Tax projection summary just says, okay, here's how much income you had, this is where it's coming from, this is your deductions, this is where you're at, your marginal rate. These next lower tax brackets are really important because that's how you know they would be saving 24% on every dollar of expense that they can add. And then it just a little bit more of a breakdown, more detailed to it. Top 3 strategies, so it gives you 3 good strategies you could use. So if they did this much of Section 179 expense on the businesses, it would save them $2,300. If they were able to maybe pay some things annually or pay it in December as opposed to January, up to $10,000, they would save $1,697. That's a good savings. And then income deferment. So let's say that maybe they're an accrual-based company, and instead of billing in December, you go ahead and do some of your billing in January or something like that. You could, or if they're cash basis, even just don't receive money. You would save $1,357. Strategy details. So then it just goes more in depth as to the strategy, so you can kind of have an intelligent conversation about what this means, how it would help you. What I say is you get this information, read it over, and then talk to your accountant and say, okay, if I do this, how do I do it? And how do I get this to save me money this year? Because $2,375 is not a small amount of money to save if you're going to do the activity anyways. Expense acceleration just kind of explains where you go through there. Then it has this piece, missing deductions. So it'll say, okay, companies like you usually have stuff like this. And maybe it means that you paid something on your personal account and didn't put it into your business account. It's a good thing to look over to say, man, I know that I put more money into charity, right? Okay, income deferment, then it explains more of that. Talks about IRAs and how to do this. 14-day home rental is a great tax strategy. A lot of people really don't take it, but should, and how much money they could save. You gotta have a lot of backup, and you want to make sure that you're talking to somebody who can help you document this correctly. Employing your children. So if you have children between ages of 7 and 22, so it goes through and just breaks this all down very nicely. And it says, okay, business entity planner, because this had 2 different entity types, and it was recommending that we move you over to an S corporation. And then it explains what that is, what the savings are, and everything, how to do this. And then traditional versus Roth IRA planners. So it just breaks it down, gives you a good report, something to start the conversation. And it gives you the important dates in order to know when you need to file things and have things done, and just keeps you on track for that. So then the more cool part of it is the planning section. So you can come in here, and this gives you dollar figures of different strategies that you could use and how much money it would save you directly. So let's say I did like the 14-day home rental. I can click on that, brings me into another screen, has a video about what that is, how to go through that, done by a CPA. It tells you what your potential savings are over here, difficulty rating. So it's a lot of what was just on that report, but this one has a video to it. And then you could go through a bunch of these different ones and watch the videos and understand what's going to happen here. And then there's another section called concepts, where what that does is it brings you to just some different ideas of what you have, what some things that you could maybe save some more money on. If I did that analysis, this would give a better married filing joint versus married filing separate understanding and how much money you could save by that. I'm just going to click on company type. So it will break down the different entity types and where you could see some savings if we had changed it. So one of these entities is a partnership, so they're subject to self-employment taxes. So it's really saying, hey, why don't you do this? And you could probably save some money if you did that. Back over to the planning section. So you can click through any of these, see what it is, but it's customized to your particular tax situation. All right, then we go to simulator. Now I did create a simulation in here. So when you first start, there is no simulations done. You have to create one by updating anything that's in here. And then you would hit, then you hit name it, and then you save that current simulation. And then so let's say you said, okay, what if I get a $50,000 raise, or what if I make a 401k contribution? What if I buy a rental property and make this much money or loses this much money? What if I sell some stocks and I have this realized gain all of a sudden, a long-term, a short-term? What is that going to do to my taxes? So this is a really good tool, especially for people who are looking right now to do some tax loss harvesting. Then you can run a comparison on it by dropping in. I'm just going to drop in the first simulation. And the second simulation. And then what it does is it just tells me what is the difference between this and my current simulation. So I had added some income to one of the simulations. So the second simulation is $41,000 more income than the current version of it. You can come back here, and if you want to go back to your presets, to what was put into the personal, you can just always hit reset. It will go back, but this was already reset. The vault is back to there where you can upload your tax return to get that put in there automatically. Again, if you do it automatically, you might need to go through and check it just to make sure it's right, especially from a state perspective. And the profile, so you can put in your personal information. You can also have it so it send you a summary email. I like to get a summary email every month, and what it'll say is it'll say, hey, last month we expected you to owe $5,000, but you've made a lot of money. Now we're thinking you're going to be around $6,000. So you can see that trend, and it gets sent to you automatically to your email address. You just have to make sure that you have the correct email address in. When we get you set up, we would go ahead and put that in for you. And then if you want, we would also ask you this question. And then you can change your password, and if you want to put your company logo or anything in here so you can make it a little bit nicer. All right, so that is the tax planning software. If you have any questions, feel free to email me at droof@davidroofcpa.com. That's DROOF@davidroofcpa.com. Or you could give us a call at 315-741-5412. Hopefully this helps you out. Hopefully you like this. We are offering it as either a monthly or an annual subscription. You can get more details about that by emailing or going to our website. Thank you, and I hope you have a great day.